In Money Watch news today, it was a strong close of the day for the U.S. stock market. The Dow Jones climbed about 320 points.
Also a good close for the S&P and Nasdaq. The S&P rose around 1.25%. The Nasdaq was up around 2.25%. Now, joining us now here in Studio 57 is Javier David and JD Durkin. Javier is a CBS News contributor and a managing editor for business and markets at Axios. JD is the host of the financial news website, TheStreet. Hi, guys. Thanks for being with us.
Thank you for having us.
All right.
So right off, I want to start with, either of you can take it, but I'm going to start with JD. The debt ceiling negotiations, this brinkmanship, I've covered this multiple times. This time it seems like they might not actually get this done in time. How are the markets reacting?
Well, I think traders are still kind of optimistic. I mean, we certainly know that in terms of the two big institutions in this country of Wall Street and Capitol Hill, they rely on one another, but they don't really understand each other very well. That's kind of the open secret. And so I think traders have sat there through different iterations of this in the past and said, yeah, they kind of come down to the 11th hour, but ultimately they feel like a deal will get done. You look at the big pop across the major market indexes today. The AI revolution is here. They're optimistic a deal will get done. I think at least for right now, there are other things to focus on. But as soon as we do get through a debt ceiling deal, as Javier certainly well knows, the Fed will be front and central, more than likely raising interest rates again in June. And so there might be a big dose of reality coming in the coming weeks.
All right, so let me ask about the Fed, because, Javier, we got new data on the Federal Reserve's preferred measure of inflation, and it actually showed prices climbed last month. So I wonder how that, plus this uncertainty over the debt ceiling, might actually affect the central bank's future interest rate decisions.
Yeah, I think the big broad takeaway here is the fight against inflation is not remotely over, and the Fed absolutely has its work cut out for it. There's a lot of talk about whether they're going to pause next month. Or this month, rather, or next month. Yeah, it's June, almost June.
Almost June.
It is, unfortunately, almost June already.
Yeah, look, the Fed for a long time, or the markets have been trying to bully the Fed into doing something that the Fed has absolutely said it does not want to do, which is stop before the job is done. There's a little bit of a talk now, like they're a hop, which is they pause one meeting and then they go back to hiking at another meeting later on down the road. But I think that today's data has shown very clearly that people are still spending, and it's creating, these sort of stickiness in inflation, and is a word that we like to use in the vernacular. But the bottom
fancy
line
financial word is stickiness.
Sticky inflation. Yeah, it just means that prices are having a very difficult time normalizing. The Fed wants us to go back to sort of 2% inflation rate. That's not going to happen anytime soon.
Soft landing is wildly aspirational at this point.
Yeah, well, we're going to get some sort of landing. I think most people, the base case for most is that a recession is coming, but it won't be terribly deep. Particularly with the job market that's still really, really stubbornly strong.
Okay. Yeah, I mean, that's the thing. We've been talking about all this sort of data that seems to contradict and not make sense for a lot of people. But I want to turn, JD, to this interesting development with this company Neuralink. So yesterday, Neuralink, which is a startup co-founded by Elon Musk, announced that it had received FDA approval to conduct the first clinical trial of its brain implant device in humans. So I wonder how Wall Street is responding to this, because this seems like an entirely new realm of possibilities here. This would be for people who, say, suffer from ALS, that they would have, the ability to essentially communicate in a way that they couldn't before. And so, there seems like there's a range of potential possibilities here in the medical front.
Yeah, absolutely. Big aspirations for a company like this, as I think is safe to say is the case for every Elon Musk-related company. I talked with more than a few people today who said, for whatever it's worth, please don't sign me up for the human trials, especially as they're in the very experimental phase. But it's worth noting, Neuralink itself, not a publicly traded company, so I would argue not a big overall necessarily really having that impact on the market. But Elon Musk has said before he wants this to sort of rival the growth of AI. And as we all know right now, generative artificial intelligence, that is the buzzword of the season. We saw that reference skyrocket 77% in Q1 earnings reports from S&P 500 executives. And a large part of that is I think they want to communicate to customers and to investors to say, hey, we'll get our slice of the pie as well. We're taking AI very seriously. We've seen this with other iterations like cryptocurrency a few years ago. The metaverse comes to mind. This is kind of the shiny thing right now. So there might be a little bit of a link, given that we've seen the last few days a huge pop in AI. AI names specifically like NVIDIA and Marvell. Arguably, I'd say little to no impact in terms of Neuralink specifically, but its connection with AI will really be something to watch in the months ahead.
Well, and speaking of Elon Musk, Javier, I want to ask you about this DeSantis launch or not launch. It seems like maybe Musk and launches are having a rough go of it lately. But what does that mean for Twitter as a brand, as a company, and how did the markets react to this kind of difficult, failed, plagued launch? They did eventually get it off the ground, but it was some long minutes of waiting for it to happen.
Twitter honestly had a pretty good week in terms of its PR, whatever you want to call it. But it seems as if the platform is really trying to position itself as sort of a free speech alternative. They struck this deal with Daily Wire, which is a right-leaning media company where they're going to basically host all their podcasts. You still have the Tucker Carlson
That's right. He's taking his show to Twitter.
Elon Musk has actually invited Don Lemon to do the same. Basically, the platform is really doing a lot to try and convince a bunch of different audiences that they can be trusted. Primarily conservative-leaning voices that want to sort of speak out unfettered in an unfettered way. Advertisers, which is the behind the hire of the new CEO, they really have to do a lot of balancing act. But basically, Twitter is trying to make a value proposition for itself. It's going to come in fits and starts, but I think that basically they've got their work cut out for them. But I do think that in a lot of ways they're making strides, and whether or not Elon sort of succeeds in positioning himself as the new, basically Rupert Murdoch, like he's going to be sort of a media voice for people that don't feel like the mainstream media captures what they want to say or what the messages they want to transmit. It's a big deal.
Yeah, it seems like it's an inflection point, right, at this moment, and it'll be fascinating to see how all of that plays out here in the coming years. Okay, because it's Friday, I want to take a turn, Javier. Let's talk about to Swift, okay? Because, she's bringing her tour to New Jersey, and it's a behemoth kind of following that she has, right? So there is an economic impact, isn't there, on local economies when a star as big as Taylor Swift comes to town. It is hotels, it is restaurants, it is all of the things that come with not just the event itself, but really the experience that not just the teenage girls and all the fans and the Swifties are looking for, but the parents.
Hey, my producer, one of my White House producers from D.C. was there. She drove to Philadelphia to get tickets. So it's not just teens and tweens. Taylor's for everyone.
Right? So there's an economic impact, isn't there? How big of an impact are we really talking about?
There is a substantial economic impact, but there's something that people often miss, and it relates directly to all of the things that you just said, and it can be summed up in 2 words: credit cards. People are charging a lot of money to do this because these tickets are expensive. 3-4 figures a piece. They're insane. Yes, insane. And it's the same thing for Beyonce. Literally, in Beyonce's case, you can fly to Europe and get tickets and a whole experience with going to see Beyonce in Europe than what it would cost you to just be in the United States.
I know
go to another city.
One of our staff members here did it. Yeah.
All of this is powered by credit card debt. Everyone's charging hotels. They're charging flights. They're charging meals. They're charging the tickets. They're charging the memorabilia. At some point, you're going to see. So basically, these people are going to be paying for this experience for months and maybe even years to come. And we've all been talking about interest rates and the Fed. Everything that all of these things we talk about often come down to what it's costing. It's all costing someone something. And in this case, because people are charging so much, it's costing them a pretty penny.
Maybe they're saving up for it, Javier.
Or maybe they're saving up for it. It's true. But I would, if I had to venture a guess.
It's a lot of money.
Yeah, it's a lot of money.
I think it's a once-in-a-lifetime, throw the plastic down, deal with the problem in a couple months. All right, now, my last name is Ruffini, so I'm a little resentful at having gotten this question for you, JD. I think there's some stereotyping going on here, but it's not wrong. I'm going to ask you about Italian pasta prices.
Yes.
Okay, so apparently they're soaring. Why is that happening, and what impact is it having on the markets?
I mean, to the point of having a full-fledged government response over this. That
because
this is
you
really
have to, because it's pasta. As I talk with my hands here, like it's pasta.
Pasta panic in Italy for sure. They say learn. Thank you. I've been working on that all day. They say learn something new every day. Here's what I learned in preparation for this segment. This is true. The average Italian consumes 51 pounds of pasta a year, which without context may not mean a whole lot until you learn the average American only consumes 19 pounds of pasta a year. So I think this is a similar continuation of the story we've seen with food prices, exacerbated, made worse by Russia's war in Ukraine. Both those countries major agricultural exporters, and ultimately it's a combination likely of inflation, supply chain challenges, and I think we've seen that throughout Europe, and it's a continuation of what we've seen here into the United States. To Javier's last point, consumers continue to spend, and that will continue to put upward trajectory and upward pressure on prices, whether it's food items here in the U.S. or certainly the importance of pasta in a place like Italy.
All right, I hope they rein that in. This is big, troubling news for my people overseas.
I have learned so much. Javier David, JD Durkin, I cannot tell you how much of a pleasure it was to have you here in Studio 57. Thank you so much.
This is really fun. You guys are brilliant. Thank you both so much.
Yes.